Okay, so this is going to start in 6 minutes. I'm going to just give you guys a little summary of what this is all about. So there's no structure to this at all. I think after a few minutes, we're going to develop a structure to this, or not a few minutes, a few days of doing this. But basically, just to summarize it, my dad, Bob Rolland, who you guys will meet shortly, spent his entire career working on Wall Street. He started at Solomon Brothers and then took a little break when my little brother Jeff was born to day trade at home. And then after about 6 years of day trading at home, he went and finished off his career at Credit Suisse and ended up retiring right around 2008, 2009. And that was also around the time when Mike and I were really getting our business going and it was starting to do well. A couple of years later, we had the acquisition happen with Order Up, where we had a little bit of equity in that. And it was the first time Mike and I got some money. And from that point on, it's really been an ongoing, nonstop conversation about investing, about the market. We probably all talk hours a day, just kind of going over what we're doing in the market, breaking down different stocks, different valuations. My dad is better than anyone I've ever seen on TV at just explaining what's actually going on and breaking down things that you don't necessarily hear a lot. So he'll talk about different support levels in stocks. He'll talk about certain narratives that don't really get talked about as much, like times of the months when hedge funds are pouring their money more into the market and things like that. So basically we decided, and this is something we've been talking about for months, and we just decided to just kind of dive into it, that we'd go live every morning for, 10, 20, 30 minutes to kind of go over the state of the market and discuss which stocks we're in, what short-term trades we're making, what long-term investments we're making. We do everything from selling put options to long-term holds to short day trades and all the above. And we're going to kind of just dive into it and basically have a conversation that we're already having on an ongoing basis. And we're going to showcase it. And we appreciate the feedback. If you guys have questions, just post them. I'm going to add Mike right now, and then my dad will be here in a few minutes. There's Mike.
What's going on?
Mike, you're muted. How you doing? You're good.
I'm
not much. I just kind of gave a quick. No, you're good now. I just gave a little summary, kind of just to discuss what this is that we're even doing, and to keep it short, I kind of just said that there's no real structure to this right now. I think we're hoping that, as we get going with this, we'll start to develop more of a structure. But essentially, ever since 2016, when the Groupon thing happened, you and I have been just talking to Dad nonstop about the stock market, about investing. He gives us advice. We also give him some opinions based on our knowledge of the age group that we're in and different things that we're seeing. And overall, I think the conversations that we have with Dad are so beyond valuable that I think our friends and network would want to hear the types of things we're talking about. He's helped us really make sense of the markets over the last few years.
And he's also very modest. For those tuning in, our father is the last person to ever give himself credit for anything. I remember going into work with him in the later days in Credit Suisse and how much respect he had on his floor. And the younger guys at his office, you could just tell how much guys looked up to him. And that was really cool to see, because he really always did a great job with us, Dan. I felt like of never really pressuring us to go into that field, even though he was so great at it. And we naturally, I think, weren't that into it until we had money of our own. Like, I know as a kid, I wanted to be a sports podcaster. So for me, it was never that interesting. But I do remember sitting on his lap as a young kid, watching all of the tickers, the red and the green. And I'm a numbers guy, just like you. I think for us now, it's in our blood, and we love the stock market. And now it's almost like we know nothing else. And it's been really cool to have a father such as Dad to educate us. And that's something I definitely haven't taken for granted, because I know the insight he's provided us has been insane, to say the least.
Absolutely insane. And I think for a while, I just thought it was second nature knowledge that just everybody had. And as I kind of grew up and just started meeting more people and talking about different people's interests and what they're doing for investments with their money and things like that, I realized that like a lot of people are kind of blind to the market. It's a complicated world out there. And I think Dad's done a great job kind of simplifying it all for us. And, I won't say that it's been all roses this whole time. Obviously, since we've been involved in the market, we've dealt with some serious things. I think like the first big thing was probably 2018, or was it 19? Yeah, around that Christmas time when the market was just nosediving. And then obviously, in March when it was the absolute collapse of the market. And, one of the things, and I'm sure he's about to call on here, but one of the stories that, not even stories, but just things that I'll always remember, and I continue to make the same mistakes, but Dad taught us really early on in the game, as soon as we started investing, the whole deal with selling put options. And he made it clear that most people buy call options and that it's almost like a sucker's game, similar to, picking specific numbers when you're like playing craps. It's kind of like a sucker's bet. So he taught us how to get on the other side of that with put options. And part of selling put options, in order to do that, you need to be set up with a margin account on each trade where you have to like apply for it, which you can get obviously, but there's no doubt, I think we've both experienced it, but you can have a lot of fun selling put options, making a shit ton of money on those premiums, but you could also get into a lot of trouble if the market goes the other way.
A lot of fun, also a lot of sleepless nights, like I saw with Delta when shit started hitting the fan here. And that's something too to talk about. Obviously we've had, I think part of it, Dan, and we've seen this in life too, it's very tough when you get success early on. And we saw that with our markets at first. With the college
I'm calling Dad right now. I'm pretty sure he's having an issue logging.
Yeah, I'll let our listeners in on this. It's very easy to have a lot of confidence and almost too much confidence in yourself when things are just all hunky-dory, success at a young age, and then shit literally hits the fan. We saw that in business with competition, from national competition, and then with the stock market.
Nice, here you are.
There he is.
We got him on.
The hat. There we go, Dad. Straight Bobby. What's going on?
So, guys, this is Bob Rolland. He's decided to rock a Sephora hat. I think he's trying to have a look for this. The glass Sephora hat. You kind of look like a Brooklyn gangster right now.
You're playing the stock market. You are a Brooklyn gangster. Let's face it.
So, Dad, to start off, what are you like on a long holiday weekend, being Memorial Day? In general, what are your thoughts going into a shortened week after, people have had a few days off?
Well, the market being closed yesterday, it was open in Europe and Asia, and it traded, and the markets liked what was going on with the viruses. And I guess they felt that Hong Kong wasn't as bad as it sounded on Friday. And we're off to the races today. That's why
what horse are you betting on this morning? Anything right out the gates?
Well, I don't like to buy stocks that are up big. It would be nice to wait for a pullback here, but we'll have to see how it goes. There's a couple of great names that are starting to run a little bit, and they've been way behind. I've been talking about the banks for a while. I think Citibank is up at least 7% today. JP Morgan is right with it, a little less, but the banks are interesting. They haven't had
financials for an investor that, say, is looking to get into a sector. Do you recommend the timing on buying into the strength, or do you wait for a day where shit's hitting the fan? What's your take on that for an entry point for a new investor?
Well, I always think the best thing to do is wait for shit hitting the fan day. And it's the hardest to buy when it's like that. And that's usually the time you want to get in. When it feels like, oh, this is great, I should buy something, that's when you should probably be getting out. It's a reverse psychology that works 99% of the time, but it's so hard to do.
Yeah, let's talk about the China thing a little bit, because I feel like a lot of people are hearing this narrative, and I'm not talking about with the virus, but more so everything happening with Hong Kong. So last week I took a bet on Alibaba having successful earnings and popping. And unfortunately, like the day before that came out, this news broke where we were going to possibly delist all these Chinese stocks. And obviously Alibaba got slammed, even though they had great earnings and they have a nice day today. But I'm trying to decide if I should dump that position or hold on to it. And could you kind of just break down like what's actually happening with China and why it's kind of a risky situation with these Chinese stocks?
Yeah, well, I think if you go back to the beginning when these stocks were listed, people were really excited about getting the Chinese stocks on the New York Stock Exchange, and they kind of looked the other way. And I shouldn't say the New York Stock Exchange. It basically listed in a U.S. format. So this is not an NYSE listing. It's a NASDAQ listing. And most of the Chinese stocks that are here are NASDAQ listing, like Baidu. But the point is that they're not following the accounting standards in some cases, and the U.S. is looking for pretty much anything to punish the Chinese. And for some reason, they think this might be a good method to do that. In reality, Baba is going to do their business. It's a business in China. And it also trades in Hong Kong and London, and it will continue to trade there. It's not like it's delisted and gone. You'll always be able to trade it. There was a time when you could not trade South African stocks because the government put a kibosh on that because of apartheid. I don't think that would happen in this case. I think you'd always be able to trade Hong Kong or London stocks. So as long as that's the case, Baba will get hit initially, but it should trade on the fundamentals eventually.
I bought some on Friday when it dipped below.
Okay.
And interestingly enough, in Hong Kong last night, it traded as high as 209, and I think it closed around 207. So you could see the buying interest is still there, where here you're getting more sellers than you did there. But people,
So
I mean, they had fantastic earnings.
with the narrative around the trade war resuming. Is that really what we're talking about here?
well, you know, there's a lot of things. I mean, with China, you've got the, you know, the trade war for sure, and the virus, and stealing our intellectual property. And it's just a combination of everything seeming to happen at the same time.
Now, let me ask you, with Alibaba looking long term, do they have any chance of survival if shit hits the fan in China as a country?
You mean to survive in China doing what they're doing?
Say, just hypothetically, China breaks up as a country over the next few years. What happens to Baba?
Well, I think Baba is a source for people to buy goods, right? Just like Amazon. And
So it shouldn't really matter politically what's really happening internally there.
well, look, China can do anything they want. They could just shut down everything. But you got to think, okay, what's in their best interest? And would that be in their best interest? Sure, it's a possibility, but I don't think that's going to happen.
So I think something that's been just an ongoing back and forth, you see all these big hedge fund guys, even guys like Mark Cuban, Warren Buffett, everybody says that at this point the market's just completely overbought, overvalued. And that was about 2,000 points ago. It's really taken on a whole new life since then. And it seems like there's kind of this pull and tug between the Fed with these stimulus bailouts where there's trillions of dollars being pumped into the economy, but then people kind of taking a step back and realizing like our economy has been locked down. People are hesitant to get back to their normal lives. So there's going to be some long-term effects. Well, I mean, how do you kind of look at the whole thing? Because on one end, you got billions of dollars every day being pumped into the market, but then you have some of the smartest people with the best track record ever saying, hey, pump the brakes. And, you know, as somebody that's always essentially all in on the market, I use margins sometimes. I oftentimes get myself into awful situations and just cross my fingers and hope it works out. I mean, where do you really see things going from here?
I mean, I think it's anybody's guess, and including these so-called experts. I think no one really knows. This is something that we've never seen before. The one thing that we do know is that there's a tremendous amount of liquidity. And as long as there's liquidity, it's difficult to see the market go down big. I think that will be the bid on the market. As long as the government is throwing money at this from every direction, it's hard to get too negative. Even
so is there a good chance we have a raging bull market if Trump's reelected on another level?
I think anything is possible. You know, you could be at all-time highs in no time, or we could be testing the lows. But you got to remember, the whole world is throwing liquidity at the markets in all different ways. You know, we're not doing it exactly like other countries are doing it, but they're all doing it.
And how would you compare this to 08 with the stimulus packages? I know it's completely different off of the situations, but in terms of the after effects from what just happened with what the government did to intervene, how long do you see that having a ripple effect in the markets?
I mean, it's so different from 08, other than the psychological part of the market where people are devastated in the beginning and then slowly they feel more comfortable. I mean, that pretty much never changes. It's always that same gut-wrenching feeling when the market gets absolutely destroyed. But the fundamentals are so much different than they were in 08. You know, we're dealing with closing down the world compared to just a really bad recession due to financial reasons. So I don't think you can compare them other than the psychology, which never changes.
No, that's a big thing, right? Psychology is a major part of the stock market.
I think it's everything in the short term, everything.
So, Dad, what are a couple stocks you're following closely today?
Well, you know, I'm following a couple of the gambling stocks.
Let's talk Penn a little. So for anyone that doesn't know, Penn National is a gaming company that owns, I think, like 18 casinos around the country. A lot of them are in these southern states like Mississippi and whatnot. But their big claim to fame as of recently is they bought a 36% stake, I think it's 36, in Barstool Sports with the option to buy up to, I believe, 50 or 52% of the company in a couple of years. And for those of you who don't know, Barstool is owned by Dave Portnoy, who is absolutely broken the internet with just all the amazing things he's been doing. He does the Davey Day Trader stuff, which has given us a lot of just not, I don't want to say momentum, but it makes us want to just be so much more aggressive in the market because watching that guy is so entertaining. And Penn National, after they bought Barstool Sports, they climbed from like 26 and change up to about $37 before this pandemic took over. And then they dropped down to under $4. And that was during that week where it was just market was down 2,000 points every damn 15 minutes and things were just out of control. And now Penn is back over 30. I've personally never seen a stock in such a straight line. Like when you look at the chart, how vertical that line is for what Penn has done since it was at, I think 1693 was the point where it just like absolutely took off. First off, have you ever seen a line like that vertical? Because I'm trying to figure out like at what point is there due to just be like a nice 15% dip just based on how much it's run up?
You know, I have seen this happen, but not in companies that exist and are in the situation that Penn is in. There was a company, Resorts International, which was the only casino that was operating in Atlantic City when it first opened. And that stock ran up from a penny stock to over 200 in a straight line.
Holy crap.
Right. And then, of course, it came off as new casinos opened and people saw the reality. And then there was, I remember a stock in Australia, it was called Poseidon, and it was a gold stock, and it ran from $5 to over 200 also, and back to $5. So they're out there. There's a lot of stocks that have done this. I guess you can make an argument for Beyond Meat or Tesla that have had these kind of runs without stopping. A lot of it is you'll see a lot of short interest in those names. And I think Penn National's got about a 15% short interest, which doesn't quite seem like enough to make this move. I think the move is on a lot of factors, oversold to begin with, and then the Portnoy effect, and then gambling coming to more and more states for tax revenues. A lot of reasons why this stock has taken off, but to say it's reasonable to be up here, who the hell knows?
Yeah, it's interesting because I feel like, and I'm starting to think that people are catching on to it, but when the Barstool acquisition first happened, my initial thought was that the Wall Street guys who run these massive hedge funds, they don't understand Barstool, and they don't understand what that could really turn into and how it's like in its infancy stages. Now I'm starting to think that maybe people are catching on because that guy puts himself out there. He's all over TV now, and I don't think there's anybody who doesn't know what Barstool is and what they're up to. So that's where I'm just wondering, does it cool off a little? It's been a stock I have done amazing on, not only holding long term, but also trading in and out of. I mean, it'll have 10% swings almost every day. And it's anytime I think things are starting to get easy is when the whole patterns change. But I'd say for the last 2.5 weeks, Penn has had a very, very consistent pattern where it opens up huge, it comes down all the way to about flat, and then it goes right back up to the moon, usually about an hour and a half after it opens. So anytime I start to follow that and think like, okay, I think I understand this pattern, let me jump on it, it's when a whole new pattern starts and you're just completely wrong, which is the beauty of this market, right?
Yeah, but you know what? It's good to do the patterns until they don't work, and then you move on to something else. Why not? If it's working day after day, you might as well get on it.
Yeah.
It's kind of like that Selectus, that biotech stock. It trades in France, and then it comes and trades here, and the French are always negative on it, and it opens down, and then all of a sudden it's been running up $1 a day or so, and then by the close, people say, oh no, France is going to be opening soon, I better sell it off, and it kind of trades down in the last hour. So that's been a pattern, and there's all kinds of stocks like that that get into these routines that work until they don't, and then you got to stop doing them.
So if anyone wants to that's CLLS. That's the ticker there. If anyone wants to follow along, CLLS, and then for Penn, the ticker's PENN. These are two exciting volatile stocks that we've been having some fun with. There's no doubt about that.
Yeah, look at long-term holdings. Like, let's go to travel for a second. I know you've been a big proponent on Boeing since it was in its infancy. Where do you go with that from here? It's obviously shit the bed and then some. It seems like it's found its support. It's bounced off its way lows, but do you think there's some room to run there in the months ahead?
Yeah, Boeing is always interesting because it's considered a national treasure. If you want to think about it a little bit, it's one of the most important companies in the United States. So from that standpoint, it always has that going for it. They seem to have been able to, have enough money to get through all this at this point. I remember when the stock was over 300, there was nothing but good news in this thing. One day after the other, good news, more orders, everything's going great. And then, of course, the MAX happened. And, after 2 crashes, everything started going wrong. And the stock got down to around 115, Mike, something like that.
It was down to 89 at some point, around that range.
But, I think in 08, it was around 90, and it almost ran back to the same price again. And now, you hear nothing but bad news. So maybe now is the time that, looking forward, you will see good things happen to Boeing. The MAX is going to come back. That's got to be worth something in the stock.
And let's not forget, it's not just travel with Boeing. It's defense, right?
Yeah, it's almost defense, and a good part of their business is in government contracts, so that'll always be there. And there will be new orders for planes. Planes will be needed. And I read an article this weekend that passenger planes are being used to ship cargo. So it's not like all these planes are sitting on the runways. A lot are being used for new things. And Boeing doesn't care if it's passengers or cargo. They just want more planes, right?
Yeah, the reason I'm bullish on Boeing and just the airlines in general is I'm at a point where I'm willing to get on a flight now. And I feel like I'm somebody that is not a careless person, but I think I'm somebody that kind of is similar to how everyone else is feeling, where, you know, people naturally feel somewhat invincible over after X amount of time. So like at the beginning, the narrative was how aggressive this virus was, how easy it was to catch it. If you didn't catch it, you start to think, oh, I'm not going to catch it. Maybe I have the antibodies. Maybe it's not as serious. But now I'm at a point where I'm going to be getting on a flight soon. Like in June, I plan on taking a couple flights.
I interrupt you here for a second. I'm live for us on Instagram. Pete just chimed in. You know, Pete has 2 kids now. I'm not flying anytime soon. So hearing that, I think we have to keep things in perspective for what your lifestyle's like to make a decision like that. You know, being a guy that doesn't have a family makes that a much easier trigger.
Well, I think there's almost 2 categories of people right now. There's the category of people that need a vaccine to come out in order to fully get back to normal with their lifestyle. And I think, Dad, you might fall into that category. And then I think there's the category of people that naturally feel like they're in that healthy age group category where they feel naturally a little bit invincible. And now there's even head doctors that are kind of saying like, hey, those people need to go out and get the economy started again. And Mike, I think you and I fall into that. And I think I could speak for both of us that we're, you know, we were talking this morning. Both of us are willing to get on a flight. I'm going to get my charger. I'll be right back.
I have no problem getting on a flight. I also don't have 2 young kids. So for me, I'm not responsible for anybody else. Well, I don't know how I would feel about that otherwise. I get where Pete's going with that, you know, unknowns where you don't know who. What's your thought?
Well, my thought is that the market is trading on the idea that this vaccine is going to happen in the 4th quarter. And if it does, then all these questions go away. People will get on flights, they'll take cruises, they'll do whatever they want to do.
But then when you hear a guy like Adam Rafat, he's not that gung-ho on, he doesn't have that much conviction that that's happening.
Right. Like, that's the other side of it. And, you know, I think the market really believes the way it's been trading, other than the liquidity reasons, that there's going to be a vaccine. And if down the road it looks like there's not going to be one, there'll probably be a big sell-off again.
See, it's funny you bring that up because I keep. Well, no, I was going to say that I just keep like thinking back to my previous experiences, and I've been pretty aggressive in the market now for a little over 4 years. So like there's been massive sell-offs, there's been massive bull rallies within those 4 years. And the one thing that I can't help but just continue to think about is every time there's been a sell-off, weeks leading up to the sell-off, there's been a lot of news to justify the sell-off. And right now it feels like one of those times where it's like there's a terrible narrative out there, whether you want to hone in on the virus or whether you want to hone in on the China-United States conflict, which to me is the worst it's ever been since Trump took office. And for a while, right before the virus started, it seemed like we were kind of on the same page as them. We got the phase 1 trade deal. It looked like there was a phase 2 trade deal coming out. Now it seems like we're almost like at a Cold War. And that's where there's headline after headline. You mix that with the coronavirus. Obviously, getting the vaccine is one thing, but then getting it mass produced is a whole nother thing. It's almost like 2 separate conversations. So it's almost like I know at some point the market's coming down hard because of all this negative news. But here I am buying my ass off, maxing out on margins sometimes. And like, obviously everyone else wants to time it perfectly. I never can, but I'm trying to ask myself what the hell I'm doing because the news is bad enough where I should be in basically all cash right now. I don't know what's wrong with me.
Because people are rational optimists. Like not rational, I'm sorry, they're optimists by nature. So I think when you look at how bad things were and, you know, people locked down and then you hear the media narrative changing a little, you're naturally going to unless the world's ending, you need to be hopeful. So I think that's part of it, but there's no doubt we have to expect there to be rocky terrain heading ahead. To think that things are just going to be all hunky-dory going to the moon, you're going to be losing a fortune. There's no chance. So I think it's us picking the spots correctly, volatility, and finding good entry points in strong, fundamentally sound stocks that have been beaten to a pulp due to this red herring once-in-a-century event, like Boeing, for example, which is not going anywhere unless the world's over. That's really, when you look at a company like that, they can't be out of business.
Well, I guess the question I have, and Dad, I know we talked about this a little like a month ago when it was all happening, but there's no doubt that like all these companies, including Boeing, have been raising an insane amount of capital to allow them to get through these situations, which changes up the internal structure of the company, the shareholders, the ownership. And that's where I'm kind of like sitting back and wondering, is Boeing actually able to get back to the promised land, or is the reality of the situation that Boeing's took on hundreds of millions of dollars in order to survive, and something has to give when that happens? It's not just like that didn't happen.
Yeah, well, one thing that'll give with some of these companies that you mentioned is they will not get back to the old highs anytime soon. You almost have to ignore where these stocks were at their high point when they've taken on so much capital, especially the airlines. However, a day like today, people are saying, what the hell can I buy that hasn't moved? And you looked at the list and it's really travel stocks and bank stocks. Everything.
And when you guys think about it too, we're in that era where the FOMO effect is at an all-time high in the world history. People hate missing out on anything. And that includes the stock market. So when you look at these stocks, DraftKings, Penn, even like now travel stocks where people are like, oh, I don't want to miss out on a run. So you have people now that are like, oh, I need to, and there's a lot of cash on the sidelines still, like Dad was highlighting. So we've got all this between people with cash on the sidelines and all this stimulus. Any good news is obviously going to pad the cushion even more.
Yeah. We've been a day like today. You have the virus stocks, as I guess they've been calling them, like Zoom. Those will be off. I don't know what they're doing now. I'm not in front of that screen.
Zoom yet, because I've never shorted a stock, but I'd like to at some point. And I've heard too many great things about that stock, and everyone I know is on it. When is shit going to hit the fan with them and Beyond Meat? Because those are two companies I've never liked. Fake burgers.
Beyond Meat had its massive sell-off already. Like, you could argue that now you can kind of get in it for the long run.
I mean, the sell-off when we find out whatever's in that stuff is not actually okay for you. Like, that's the sell-off I'm talking about, not that's happened yet. I still don't believe in that being legit as a product, personally. I think it's awful for you. I could taste it and tell. Like, actual beef is better for you than that crap.
I'll tell you a stock that I've been playing the swings pretty aggressively on and I've done well with, and today it's looking interesting, is Peloton, because Peloton trades with the stay-at-home stocks, which you're right, they're giving up today, and Peloton is down about 5% today. And
when we get off, right?
Peloton's a great company, and I don't think that's a company that at all loses its momentum when things go back to normal. I think anybody that bought a Peloton loves it. I know a lot of people personally that bought a Peloton and then they're on the monthly subscription service to use it. I think Peloton's going to come out with a lot of other things, and they will have competition, but still seems like a stock that's kind of in its infancy phases.
I know it's way early to say this. I look at Apple buying them in a couple of years with where healthcare is going and the way they are as a very turnkey, seamless company now with subscriptions. I just see that being an Apple Watch home run synergy. I really do. And I love Peloton. I had an option on that. I got out of a little early, but I made good money on it before this, right when we were visiting Papa in Arizona, before this even started. But I think, they're seeing now they're offering lower end bikes, like lower price points, which I think is genius. To be able to have
all about the subscription model for them.
Yeah, and I don't think you're going to see a lot of people wanting to even go back to gyms, honestly. I really, this Peloton is a major winner. And I also want to talk to you guys about Chewy. I know you guys have known I've been bullish the last couple of weeks on them. I haven't bought any yet, but even yesterday, meeting a couple of people in the park with dogs, they both use Chewy. One has a puppy, just got on Chewy. When you look at winners throughout this that should continue to win, pets have been prioritized to another level. Once you're on something like that, why would you get off of it?
Yeah, the thing I love about Chewy, same with Peloton, is if there is a day where there's any negative news about the virus again, you're going to see the stay-at-home stocks crank right back up. And to me, it's tough to imagine that we're like completely out of the weeds when it comes to this whole virus situation. I think anything can come out, like for a company like Moderna, that, you know, the trials that they're doing ended up not working. And to me, the likelihood of things just getting back to normal and us having a vaccine, it's not as high as the likelihood is of like there being more issues that come up about these vaccines not really quite being ready as we thought. So, I mean, Dad, why don't you tell us like a little, because I know we've been getting more into day trading and whatnot. Are there like a couple little, I don't want to say like secrets, but little things you try and stick to when you're doing day trading? Like something that I've learned the hard way is to not look at a day trade as an investment and have a limit where if you're wrong, you get out. So if like you take the stock's going up and it starts to go down, is there a point where like, well, if it hits this point, I was wrong and I'm out?
Look, the main thing about day trading is taking the losses quickly. And you could miss out a lot doing that because a stock could drop 3 or 4% and then jump back up and you just get so frustrated. So you got to be willing to take those hits and then be willing to buy the stock back when it's up from where you sold it.
What percent of your portfolio do you think makes sense? No, I know it's based on age and everything, but you're a conservative guy. Someone that's young, that's our age group, that's looking to day trade, to get their feet wet, what would you recommend as a good starting point for a percentage?
Well, I think it should be an extremely low percentage and let it build up so it's a higher percentage. So if you start with, let's say, 10% of your total money for day trading and it gets to 20, then you're doing it right. If it goes down to 5, then just stop doing it.
Stick to your day job if you cut it in half.
Right.
So right. Let's end us each having a stock of the day we like for our listeners. We could end that every segment with what's the stock of the day that you would buy for people right now.
Okay, well, I'm going to start, and I'm going to stick with what I just said a few minutes ago, Peloton. I've been playing the swings, like I said, and I don't think that's a company that only thrives if everyone's staying at home. I think this allowed them to get their foot in the door, and I like Peloton right now.
Yeah, nice Peloton today, folks. Dad?
I like, as I said, I love the banks because they're so beaten up.
What's your favorite?
I think my favorite name would be Citibank, just because it's a little more leveraged than JP Morgan.
Okay, and I'm going to go with CAR, K-A-R. I know I've talked to you offline about this. CAR Auction Company, they are, to me, going to be a major winner out of this. They're breaking out today, and they're going to break out on another level because rental car companies are in shit. You're seeing, I have buddies buying cars on the cheap right now for this exact reason. Thank you, Leon Goldfeld, for that tip, by the way, because I wouldn't have known about this one otherwise, but I've made good money so far on it. I loaded up more on the strength this morning because I think that's about to break out on another level. So Peloton, Dan, Citibank, buy, CAR, me. Good first day, guys. We'll chop it up again in the morning. Boom, baby.
Yeah, this was great. Awesome.
Enjoy the day.